Welcome back to another video. In today's video we're going to go over what fundamental analyses are and how do we use them in forex trading. So let's get started. First things first, please pause this video and go through the disclaimer below. Once you've read the disclaimer, please continue with the video. So let's get started. What are fundamental analysis? Fundamental analysis are basically what's going on in the forex world, but the fundamental side of the forex world. So in this case we're not looking at the technical aspects such as the chart patterns or the candlestick patterns. This involves things like the economic factor. They also involves things like the financial factor and so on and so forth. So it's all about a fact about a country, whether the currency is getting weak, whether the currency is getting strong, and there's loads of different ways that we can look at this information. Again, fundamentals are really important, guys. I can't stress how important fundamentals are. There's a lot of traders that are out there who ignore the fundamentals, who ignore what time these news events are occurring, who ignore everything about the fundamentals and think the trading is all about technical and technical based only, but unfortunately it's not. We use fundamentals and we use technicals together in order to be profitable and in order to predict where the market's going next. So like I said to you, it includes different things, and we're going to be covering that in the next slide. But then again, these fundamentals and these facts in the economic world, they decide whether the currencies will appreciate or depreciate, i.e. will get stronger or will get weaker, depending on this data that's come out or released by the government authorities, bodies, and so on and so forth. So now you must be wondering, what are key fundamentals and how do they work? So here's some of the things that I want you to look at when you're trading, and these are the really important factors and fundamentals to do with forex. So first things first is the economic indicators. What I mean by these is, again, it's like I said to you, it's data that's getting released and it plays a crucial role in the forex trading. So there's things like the GDP, which is the gross domestic product. There's also things like the employment rates, such as what number of people are employed. There's also things like the inflation rates, and then there's also things like inflation is obviously the price. Most of you guys will know what inflation is. Again, it's to do with how expensive and how cheap the things are. There's also things like the CPI, which is the consumer price index. There's retail sales data, so what sales have gone in the retail side. There's also things like the industrial production, and there's loads of different things. But again, we use this information to see if the currency is getting stronger. Let me give you an example. Let's just say the inflation in the UK is hit the all-time high. So that means that if the inflation's hit all-time high, that means that it is bad for the currency because things are getting expensive, and the public are finding it hard to purchase. The purchasing price has gone lower. You're paying more for the same things as you usually do, and it's like, for instance, let's just say that you were paying £1.10 for a carton of milk, but now because of the inflation, things have gone up and the price has gone up. Therefore, you're paying more for the same carton of milk as you were paying when the inflation rate was low. And there's also things like the CPI index, which is the consumer price index, the retail sales, whether they've gone up, whether they've gone down, the industrial production, such as what's been produced in our industries, has that increased, has that decreased, and we look at these different factors to see what the currency is doing and how if the currency is getting stronger, if the currency is getting weaker. Next thing is really important. As you guys know, interest rates, they are one of the most crucial factors to see how the currency is performing. Central banks, they set the interest rates, and these rates are obviously, they impact the currency. So when the interest rates are higher, then it attracts the foreign investors because they want to invest in the country. They want to get more return for their money. When the interest rates are high, consumers are paying more interest on the loans that they borrow, so it affects them as well. It also affects the lower interest rates. It can basically lead to a currency depreciation. But higher the interest rates, the customers are paying more. You get more returns on their savings, and so on and so forth. Now, again, we get interest rates on mortgages, we get interest rates on finances that we borrow, we get interest rates on different things, like for example a loan that you might have, or anything else that you're paying for on a credit term. it contains an interest, unless there is a zero interest, which is obviously a different topic, and this doesn't apply to that. But again, interest is really important in how it affects a currency, because it determines how strong or how weak it's getting depending on the interest rates. Now, next thing is political stability. Now, a lot of you guys must be wondering, what is political stability, because it sounds a bit confusing, so I'm going to go into that now. So these are things like the elections. For instance, when there's elections in the UK, the pound will go. You'll find that, it'll act a bit weird, and because it's indecisive, the market's in a range, or if the elections, if a new party gets elected, you'll see that'll have a difference on the pound. When the elections are going on, you'll find it very hard. The volatility might not be there. So we need to know these political stuff when we're trading, so we can back that with our technical analysis and come out with the best possible outcome. Trade and current account balances. Again, this is another crucial factor to do with the fundamentals of the country, and there's different ways we look at this. For example, this basically trade and current account balances pretty much means the import and export. So import is what the country is bringing in from other countries. Export is what we're exporting out to other countries. For example, let's just say the Middle East is exporting the oil to the USA, Canada's exporting oil to the New Zealand, and there's different things, and that affects the currency stability. If the exports are high, imports are low, imports are high, exports are low, so on and so forth. And how we determine that for the currency, whether it's getting stronger, whether it's getting weaker. So we need to look at these stats very, very closely as we're trading, and we need to know that we're on top of everything. Next thing is global events. Global events are things like the natural disasters or the war that's happening in Ukraine, for instance, with Russia. So that's really bad for for example, the Russian economy, as well as is bad for the Ukrainian economy. Again, there's things like the pandemic, which a lot of you guys know about. It's probably the first time ever you've experienced something like that. And during the pandemic, COVID-19, currencies were acting really weird. There was a lot of depreciation in the stocks. There's a lot of depreciation on the currencies, and the market wasn't really the way it usually is, because it was very indecisive and no one could predict where the market's going. Some stocks lost out massively, some stocks gained depending on the type of stocks they were. Again, things like the airlines, they were really struggling, the oil companies and so on and so forth. And pandemic had a massive impact on everything. And as you guys know, a lot of countries, they were in a really, really, really big financial, as well as the health side of trouble, which they had to face, unfortunately, due to this very unforeseen circumstances situation. But again, these things have an impact on the Forex market, and then it causes uncertainty, it causes a different type of market behavior, which it usually doesn't do, and that affects our trading ultimately. Now, next thing is trading account balances, which we've been on, which is the import and export. Speculation is an important one, because we need to know the market is going into a certain direction, and we can use the fundamentals, and we can use them along with our technicals as a double probability in order to take a position. Let's just say that we're taking a buy on the Euro USD. The Euro USD is bullish, it's creating a higher high, higher lows, is broken on resistance level, is going upwards, and the daily's on buys, and the 4 hours looking strong bullish, and now we're looking at buys. And then the interest rates comes out, and the interest rates are high, so that means that we can say the euro's getting stronger. Now we can put them both together, so we can put the interest rates news that came out along with the confluences, along with their technicals, such as the bullish candlesticks, the bullish chart pattern, the bullish market behavior. The market's creating high lows, so it's in an uptrend. And now we can combine those both together and take the buy position on euro to increase our probability. Again, guys, there's no guarantee. That's why we're saying it probability, because these are the probable factors. Now we can increase our probability by basically putting them both together, and we can take the bullish position, and then that we can, in that way we know that, you know, we've got the probable technicals and we've got the probable fundamentals along our side for us to take that trade. Now we're getting to the conclusion part, guys. Again, conclusion is, like I said to you earlier, we use fundamentals, we use technicals as a part of our trading. There's nothing, we can combine them both together to enhance our chance to win the trade, but again, it's not guaranteed, guys. You can definitely gain an edge, but you can't guarantee that you'll be 100% right. Unfortunately, no trader in the world is 100% right. If they were, then, you know, they'd be the best and everyone would be with them. But again, there's big corporates like the hedge funds. There's traders who only have like a 50 to 60% win rate. Some have lower, like 20 or 30%. Again, that depends on your risk and reward, which I'll be creating a video on in future. So please stay tuned. Please like the channel, please subscribe and leave a comment below if you have any you know, questions. I'll be more than happy to help. Again, my goal is for your trading to get really good, for you to be really good at what you do, and like increase your chances in the forex market, so you can come up in a profitable manner. Again, guys, thank you so much for watching this video. I look forward to seeing you in future videos. Please like, please subscribe, and leave a comment below if you have any questions that you may have. Thank you.